Hi, I'm Greg Corombos. My guest at this time is Mike Sommers. He's president of the American Petroleum Institute. Coronavirus is not the only destabilizing factor in our markets right now. With the Saudis dropping the price of oil, there are growing concerns that American producers might not be able to compete for long at those rates, particularly in the fracking sector. The Trump administration is looking for ways to extend a helping hand. However, Mr. Sommers says the industry will be just fine on its own. So we'll have plenty to talk about here for the next few minutes. And, sir, thank you very much for your time.
Great to be with you, Greg.
Well, let's start with a very brief explanation of where we are. Why are oil prices so low right now, and what impact is that having on domestic producers?
Well, if you think about where we started, in December, the oil markets in this country were actually very well supplied. We had excess oil on the market. Gas prices were relatively low. And then what happened when coronavirus came around, you started to see a demand shock. So countries like China, who had a very significant coronavirus infection in that country, you saw demand significantly go down for oil and natural gas. And as a consequence of that, you started to see steady declines in the price for oil. So and now we're in a position where the Saudis and the Russians in particular have decided to oversupply the market. And so oil prices are going down as a consequence of that. So you have a combination of a demand crisis in that the demand for these products are going down. At the same time, you have a supply crisis. And as a consequence, you're seeing oil prices really go down a lot further than they have in recent history.
Classic supply and demand curve. So how can producers, especially shale producers, since they seem to be the ones folks are most concerned about, hang on at these prices?
So this is an industry that has really invested for the long term. It's an industry that for 100-plus years has been around and is used to this cyclical nature of oil prices. And so, we believe that the best solution to this is the free market, is that supply and demand are ultimately going to catch up with each other. This is an industry that also believes that the demand for these products is only going to increase over time. If you think about the fact that by 2030, we're going to need 25% more energy than we have on the market today, we need to make these markets are going to continue to demand these products. So this industry understands the cyclical nature of what's going on, and we don't think that it's wise for the federal government to get involved in these markets at this time.
Get a little more specific. What sort of intervention was being discussed, and explain in a little more detail why you don't think it's necessary?
Yeah, there have been lots of different ideas. There have been, some ideas that we should put tariffs on Saudi Arabia and Russia. We do not think that's a good idea. The real reason why we're concerned about that is the United States is now a net exporter for the first time in recent history of oil and natural gas. If we were to put tariffs on Russia and Saudi Arabia, tariffs would be put on American products as well, and we could ignite a major trade war. We think that's a really bad idea and ultimately would be really bad for American producers. There are other ideas of low-interest loans or some other ideas that have been floated out there that the federal government should actually purchase some oil. Again, we believe that that's interfering in the free market and would not be good for producers in the long term.
What about tax policy? There's been talk of a payroll tax holiday and maybe some other incentives. Would that be well received, or once again, would you be more likely to encourage Washington to just keep its hands off here?
Well, those are a little bit different, right? So what we're concerned about is direct intervention into the supply and demand curve of the oil markets. That's where we're concerned. If the federal government decides to do something more on the consumer side, that's something that we wouldn't weigh in on and maybe even would be favorable towards if that's what the federal government decides to do. What we're concerned about is intervention in these free markets.
Mr. Sommers, one of the big wild cards here, of course, is we just don't know how long this coronavirus is going to be impacting demand, whether it's in China or anyone else. So it's hard to know exactly when the cyclical nature of the markets is going to move to a different part of the cycle. So what's the industry's plan to endure this, whether it's a matter of weeks or a matter of months?
Yeah, so as I said, this is an industry that is invested for the long term. We're confident that the demand for these products is going to increase. It is definitely going to increase as you look into the longer time horizon, just based on population growth and needs and increasing affluence throughout the world. They're going to demand more oil and natural gas. So we're confident that the demand side will pick up. The World Health Organization just determined that this is a global pandemic, and I think the best thing that lawmakers can do is accelerate progress towards treatments, and that means getting the bureaucracy out of the way so that treatments can get on the market as quickly as possible to help to solve some of these demand concerns. It's not just the oil business that is suffering right now. It's other places like restaurants and hotels and tourism. I think all of us are concerned that if we don't get Corona under control, that this is going to be a longer-term dilemma, not just for oil, but for the broader economy.
You mentioned a fact that a lot of folks just take as a given now, Mr. Sommers, but it was a really important moment last year that didn't get a lot of banner headlines. And considering where we were about a decade ago, folks back then would probably have their jaws on the floor, noting that we are now a net exporter of energy. Explain how we got to that point, because a decade ago that certainly wasn't the case.
That is absolutely right. In fact, we've doubled production of both oil and natural gas just in the last 10 years. We got there because of new innovations. We got there because of technology. If you had imagined a scenario where the federal government demanded that we do a certain thing to get energy to where it is today, it never would have happened. This was an example of the free market working. New technologies came online, particularly as it relates to hydraulic fracturing and horizontal drilling. And as a consequence of these new technologies, we've been able to extract the resource in a much more economic way, and we've been able to find the resource as well. So this is it's truly because of American innovation that we're here where we are today. What Russia and Saudi Arabia are trying to do is trying to kill this burgeoning industry in the United States. They're flooding the market with oil, and as a consequence, they're trying to undercut American producers. But make no mistake about what their goal is. They're cutting prices today in an effort to raise prices later. We need to make sure that this industry is properly prepared for these kinds of shocks. But the last thing that we need in this country is for government intervention that's going to get in the way of progress for the industry.
Well, Mr. Sommers, I think it's reassuring to a lot of folks to hear that there is a plan to endure this and come out healthy on the other side. And I think it's also helpful for folks to understand exactly the factors going into the turmoil right now in the oil market. Thank you very much, sir, for your time today. It's truly appreciated.
Great to be with you, Greg.
Thank you, sir. Mike Sommers is president of the American Petroleum Institute. I'm Greg Columbus reporting for Radio America.